In this video, we're going to talk about a deep look into Bill Gates' 2022 portfolio. Before starting, please do like the video and subscribe to this channel for future updates. Bill Gates ranks 4th globally after Jeff Bezos, Elon Musk, and Bernard Arnault. He's worth $129 billion. According to a 13F filing, the Bill and Melinda Gates Foundation has a $19 billion investment portfolio. We can only dream of such wealth. The average investor and the world's richest person share one trait. We all want long-term stocks. Reviewing Bill and Melinda Gates Foundation's stock holdings is helpful. The Bill and Melinda Gates Foundation owns several lucrative competitive firms. Many equities pay dividends and increase them over time. This video discusses Bill and Melinda Gates' 18 stocks. Number 18, On Holding AG. On Holding creates and distributes sports products globally. It sells through independent retailers online and storefronts. Number 17, Weber Incorporated. Weber manufactures and distributes outdoor cooking products, accessories, consumables, and services. It sells charcoal, gas, pellet, and electric grills. Number 16, Madison Square Garden Sports Corporation. Diversified Sports Corporation, Madison Square Gardens Sports Corp. It owns the Knicks and Rangers. It owns NBA G Leagues, Hartford Wolfpack, and Westchester Knicks. It also owns Knicks Gaming and Counter Logic Gaming CLG. Number 15, Sanderson Farms Incorporated. Sanderson Farms is an integrated poultry processing company, produces, processes, markets, and distributes fresh, frozen, and prepared chicken products in the United States. The company sells ice-packed, chill-packed, bulk-packed, and frozen chicken under the Sanderson Farms brand. Number 14, Coupang Incorporated. Coupang is a southeastern e-commerce app and website. It sells home items, fashion, beauty products, fresh food, sporting goods, technology, and more. Number 13, FedEx. FedEx Corporation is a transportation and shipping company. Transport, e-commerce, and business services are offered. FedEx has 4 segments: express, ground, freight, and services. FedEx hiked their quarterly dividend by 53.3% to $1.15 on June 14th. FedEx published Q4 and fiscal 2022 results on June 23, 2022. Quarterly revenues rose 7.94% to $24.4 billion. Revenue management boosted results. COVID lockdowns, geopolitical uncertainty, and weaker economic development slowed global volume growth. Higher self-insurance accruals and higher purchase transportation and labor rates hampered FedEx Ground's operating costs. FedEx Freight's operating margin improved by 570 BPS, attributable to efficient cost management, including higher fuel surcharges and a 28% rise in revenue per shipment. Number 12, United Parcel Service. United Parcel Service provides logistics, ground freight, ocean freight, insurance, and financing. U.S. domestic package, international package, and supply chain and freight are its 3 segments. Competitive advantages have helped the organization grow despite global economic difficulties. UPS is America's largest logistic package delivery firm. Its only major rival is FedEx. Amazon is building its own logistics business, but it still uses UPS. Number 11, Schrodinger Incorporated. Schrodinger Incorporated makes medical equipment. It operates a computational platform to speed medicine delivery for external clients and internal programs. Schrodinger's IPO was in 2020. The stock is worth $2 billion. Schrodinger's medicine distribution platform and broad, diverse customer base have high growth potential. Because of the value of its products and services, Schrodinger has a long expansion runway. Designing pharmaceuticals is hard, capital-intensive, and fraught with failure. Schrodinger will continue to get numerous customers outsourcing business. Number 10, Crown Castle International. Crown Castle is a REIT. Here's our REIT list. Crown Castle owns small cell towers and fiber cables for data transfer. The trust owns, operates, and rents over 40,000 cell towers and 75,000 route miles of fiber in every major U.S. market to support data infrastructure. Crown Castle's top and bottom lines were poorer than predicted in the first quarter of 2022. FFO per share was $1.87, 2 cents below expectations. Revenue was $1.6 billion, up 15% year over year, but $120 million below projections. Site rental sales increased from $1.36 billion to $1.57 billion in Q1. Revenue rose from $121 million to $421 million. Adjusted EBITDA rose from $897 million to $1.09 billion. Number 9, Microsoft. Microsoft, founded in 1975 and based in Redmond, Washington, develops, manufactures, and sells software and hardware. It offers operating systems, commercial software, software development tools, video games, and gaming hardware. Microsoft published Q3 FY 2022 results on April 26, 2022. Microsoft's fiscal year finishes in June. Quarterly revenue was $49.4 billion, up 18% from Q3 2021. Productivity and business processes, intelligent cloud, and personal computing all grew 17%, 26%, and 11%. Number 8, Coca-Cola FEMSA SAB. Coca-Cola FEMSA sells and distributes KO drinks. It is fizzy and still drinks. It sells items in Mexico, Guatemala, Nicaragua, Costa Rica, Panama, Colombia, Venezuela, Brazil, Argentina, and the Philippines. The largest franchise bottler is Coca-Cola FEMSA. The stock provides exposure to Latin America and South Asia, two promising growth regions. Number 7, Deere Company, DE. Deere is the world's largest farm equipment maker. The company makes construction, forestry, and grass equipment, engines, and financial solutions. 1837, Deere's founding. Deere published second quarter financial results in 5/20/2022. The company's sales climbed 11% from the previous year. Production and precision ag, small ag and turf, and construction and forestry each posted 13% sales growth. Deere grew EPS 20% from $5.68 to $6.81 and raised dividends 8%. Since 2021, it's tripled its dividend. Number 6, Walmart. Walmart has durable competitive advantages. It's the largest retailer in the U.S. The corporation dominated retail by cutting costs everywhere, especially in supply chain and distribution. When times are tight, consumers turn to discount retail. So, Walmart grew during the Great Recession. Walmart is the Gates Foundation's recession-proof stock. Number 5, Ecolab. Ecolab's creator, Merritt J. Osborne, devised AbsorbBit in 1923. This product cleaned carpets without closing businesses. Osborne founded Ecolab around the product. Ecolab is the industry leader with $13 billion in yearly sales. Ecolab has 3 almost equal-sized business segments: industrial, institutional, and energy. The company is geographically and operationally diversified. Ecolab published 4/26/22 first quarter fiscal 2022 results. Organic sales surged 12% over the last year's quarter. While high cost inflation raised product expenses, despite material price increases, adjusted EPS climbed only 1%. Number 4, Caterpillar. Caterpillar dominates heavy machinery. Its brand dominates the industry. Caterpillar makes construction and mining equipment. Construction industries, resource industries, and energy and transportation are the company's core segments. Financial products provide auxiliary financing and services. Caterpillar released Q1 earnings on April 28, 2022. The company's quarterly sales were $13.6 billion, a 14.3% rise from Q1 2021. Construction, resource, and energy and transportation each grew by 12%. Sales volume and end-user demand for equipment and services drove increasing revenues. Dealers boosted inventories more in Q1 2022 than Q1 2021, boosting the company's top line. Profits were improved by price realization. During inflation, the company's cost rose. Caterpillar's operating profit margin was 13.7%, down from 15.3%. Profits grew more slowly than revenues. Adjusted earnings per share were $2.88, up from $2.87 last year. Number 3, Canadian National Railway. Canada's only transcontinental railroad is CN. It connects the Atlantic, Pacific, and Gulf of Mexico with 20,000 route kilometers. It handles $200 billion in commodities and 300 million tons of freight annually. Canadian National Railway upped their dividend 19.8% for March 31, 2022. Canadian National Railway reported first quarter earnings on April 26, 2022. 1.5% revenue growth surpassed projections by $9.1 million. Adjusted EPS of 103 was 6 cents below than predicted. Canadian National Railway's operating ratio rose 440 basis points to 66.6% due to a tough operating environment. Ton miles increased 5% during the quarter, better than the 10.5% drop in the fourth quarter of 2021, following another tough comparable quarter. Grain and fertilizer volumes decreased 18% and revenues fell 15%. Intermodal volume fell 13% sequentially, but revenue climbed 9% owing to better pricing. Carloads of petroleum and chemicals rose 6% and revenues rose 14%. Carloads of metals and minerals fell 6%, while improved prices boosted income 10%. Forest products revenue fell 1% as a price increase couldn't offset a volume reduction. Demand boosted coal sales by 55%. Number 2, waste management. Waste management has a vast economic moat, a word used by Warren Buffett to describe a competitive advantage that protects a company from market competition. Waste management recycles and removes trash. Few corporations dominate this extremely specialized industry. Waste Management announced Q1 2022 earnings on April 26, 2022. Quarterly revenue was $4.66 billion, up 13.4% from Q1 2021. Adjusted net income was $540 million on $1.29 per share, up from $450 million or $106 in Q1 2021. Total firm volumes grew 3.6% in Q1 compared to a 3.3% fall in Q1 2013. Waste Management bought $250 million in stock in Q1. Cash dividends totaled $525 million for stockholders. Waste Management's 2022 forecast was reaffirmed. The company expects 5.8 to 6.2% revenue growth and $5.325 to $5.425 billion in adjusted operating EBITDA. Number 1, Berkshire Hathaway. Berkshire Hathaway shares is the Gates Foundation's largest individual position. Money is safe. Warren Buffett transformed Berkshire from a struggling textile business into a global conglomerate. Berkshire is an international powerhouse. It operates dozens of enterprises in insurance, railroads, energy, banking, manufacturing, and retailing. It's worth $600 billion. Berkshire has 5 parts: wholly owned insurance subsidiaries like Geico, General Re, and Berkshire Reinsurance, wholly owned non-insurance subsidiaries like Dairy Queen, BNSF Railway, Duracell, Fruit of the Loom, NetJets, Precision Cast Parts, and See's Candies, shared control businesses like Kraft Heinz and Pilot Flying J, and marketable publicly traded securities including stakes in American Express, Apple. Buffett gauges Berkshire's performance by book value and annual shareholder letters. Book value is a company's assets less liabilities. Book value is the difference. This is Buffett's preferred proxy for a company's intrinsic worth. So what'd you think about our video? Let us know in the comment box below, and please do like the video and subscribe to our channel for future updates.